lenders. What is up, everyone? It is great to be here. My name is Zitin. I'm the CEO and co-founder of a company called Reggora. And it is time for your favorite part of the day, time to talk appraisals, because that's what we do. We streamline and automate the residential real estate appraisal process. And a little bit of background on us. We are a venture capital-backed fintech. We've raised over $55 million in venture capital, with over half of that going to product and engineering. So what that means is that we've spent literally tens of millions of dollars in research to build the best appraisal experience possible in the industry. We're about a 130-person company. We work with over 100 lenders throughout the country. So the porridge is just right with Reggora. We're not too big in terms of legacy kind of incumbent, and not too small in terms of we're battle tested and have, like I said, invested lots of time and energy into this. We work with some of the largest lenders throughout the country, ranging from small local credit unions, like I said, all the way up to some of the largest mortgage lenders. And effectively, the outcomes that folks are looking for when they look to a platform like us: reducing cost per loan. We save over $250 per loan. We reduce cycle times. So the appraisals, people in the industry love saying the long pole in the tent of mortgage. We help reduce the cycle time on that, improve loan officer visibility and transparency into the appraisal status, and reduce revenue leakage. So in terms of why should you care about modernizing your appraisal operation, these are really the three core things that matter when it comes to an appraisal platform. We help reduce cycle times, improve the borrower experience, and empower loan officers. So what do we actually do? We plug into the core systems inside of your infrastructure, like the loan origination system, point of sale system, even TPO. We have integrations with all the big out-of-the-box systems like Encompass, Empower, Byte, all of those folks, as well as an open API that works for lenders using proprietary systems. And on the other side of the platform, we have over 60% of the entire US appraiser population, as well as over 150 different appraisal management companies plugged into our system. So we are the A to Z solution for all things appraisal, where payments, ordering, statuses, all of that is flowing through a platform. So let's take a look. As you can see here, this is the main pipeline where all the appraisals come into. So this is either embedded directly within the LOS system, or a team of appraisal operations folks is working out of our web application. And this is the core screen. You can see all the statuses of your various appraisals. You have filters in terms of identifying the fires. So you don't want to look at every single appraisal. You only want to focus on the ones that are causing exceptions. So we have this filtering system where you can create custom filters, where I want to look at rush orders, or ones that are behind schedule, or ones that have overdue payments, UCDP scores are below 2.5 or above 2.5. Anything that you can think of, you can use these filters to identify the appropriate loans and jump on them. But I actually want to start and go from the beginning of the process a little bit and talk through the ordering and payments. So one of the big pain points for a lot of lenders is disclosing accurate appraisal fees, dealing with fee escalations. We see countless lenders losing 6-7 figures worth of fees on improper disclosures and improper change of circumstances. So what we've built is the ability to maintain a fee engine directly within the system. So we have all of our different products, like a single family 1004. We can set up geographic pricing all the way down to the zip code level. And we use benchmarking data across hundreds of thousands of appraisals throughout the country to set the right fees. And then we can set up business logic that says, hey, if XYZ is equal to this in the LOS system, then order this appraisal. So instead of the loan officer or someone ordering the wrong type of appraisal with an inaccurate fee, we know exactly what the fee is going to be for everything. Let's take a complex jumbo in this area of California. We know that it's going to be $700 and disclose appropriately. Automatically order once intent to proceed is met. So orders are flowing in here. We're collecting payments. We're helping with disclosures. And inside of a given order, you can see the famous Domino's pizza tracker of the appraisal as it's progressing in real time throughout the order. So we're pulling in information from the LOS system about who's on the file, who's assigned to it, the dollar amount. You're getting a timeline update as everything is happening in real time, with the ability to communicate with the vendor directly if you have the permission to, obviously. So basically everything is being managed in here, and we're automating a lot of the manual tasks that are being done today. We also have a reporting, out-of-the-box reporting platform to use for our lenders to make sure that you're able to hold your vendors accountable and see what are my turn times in this area by this vendor, and look at appraiser scorecards at an extremely granular level with easy access. So for things like, hey, I want to see the revision rate of this vendor in this particular area, or how frequently are they doing fee escalations. So this platform essentially allows for an A to Z streamlined management of the appraisal process, which the least amount of touches as possible, and only focused on exceptions. We also have collateral underwriting, UCDP integrations, revisions, things like that. I also want to talk about where the future of appraisal is going, because being able to handle regular appraisals is great, but I'm sure we've all heard at this point the future of the appraisal industry and some of the new products that the GSEs are putting out around hybrid appraisals, property data collection reports, and things like that. A lot of folks are reliant on third-party vendors like appraisal management companies to go and fulfill those types of transactions. We provide workflow software to make these new types of products happen, like hybrid appraisals and things like that. So let's take a look. It's impossible to demo this in a massive auditorium, so we have a little bit of a video here. But essentially, the data collector is going to be going to the property and doing actual 3D scans of the property. And this is going to be entering in data, getting measurements, everything like that needed to create a floor plan and rendering of the property. So this is literally someone walking in with an iPad, mobile phone, doing the actual inspection, getting it completed, and entering in information like what type of utilities, the site, view, things like that. And so essentially, for hybrid products that offer the ability to get much faster turn times compared to traditional appraisals, we're going to be able to support that workflow using your own appraisers as well, or through an outsourced appraisal management version of that. So this is what we see as the future of appraisal, and it's a complex workflow that involves third-party vendors and very modern technology like this. So just to summarize, folks, going back in terms of the 3 core things that we do and focus on in terms of outcomes for lenders with our appraisal platform, the goal for us is to reduce cycle times. You don't want the appraisal to be the thing holding up the transaction, and we do that through various automation, allocation algorithms, reporting. We improve the borrower experience by plugging into the point-of-sale system, loan origination systems, payment links, helping with upfront disclosures, payments, everything like that. And then we empower loan officers by bringing transparency, automation into the process. So that's a little bit about Reggora. We have a booth out there. I'm also going to be speaking at a session later today. So appreciate the time and looking forward to working with you guys.
Great job, great job, Brian. I will say, just to start, 258 per loan savings. It'd be cool to break that out. That would be a great part of the presentation. Given how you presented, you could fit that in 8 minutes easily. I'm going to underline a couple of things. The fee engine in the system to set the right property, geography, appraisal type on orders to save on loan disclosures after the ITP, I think is like a huge deal. Right now, cost is everything, and being able to get this stuff done fast, especially on the purchases, and not screw up the disclosures, like that alone is something I wanted to underline. I just thought it was really cool. So great job.
Appreciate it.
I love the reporting platform. Again, that's something that we keep touching on, is like, how do you get at the data? And you've provided a great example for that. I love the pizza tracker. Everybody understands what that is, and it's always, giving that clarity and visibility, I think, is good. I loved the scan. I loved seeing the happy appraiser, with his, scanning the property. But that's cool. You're looking to the future. I love that you did bring up the metrics, as Julian said. I would ask if some of those metrics are still going to be true in a purchase market. Because there are some of those, and I understand you've got what you've got for your data, but I would focus on making sure that's true in a purchase market going forward. But great job.
Thank you.
Yeah, I echo all of that, and would just add, I wish I would have talked a little more about the integration into the LOSs and what that requires and how fast and how long it takes and the cost of that.